You raise rates and you bankrupt future generations. You bankrupt this country. You blow up the economy. There's your Great Reset. Is it going to happen? Don't know. But if I had a gun to my head, I would say the Great Reset is underway.
Here at Liberty and Finance, we're licensed brokers with Miles Franklin. We are standing by the inventory, ready to make sure you get what you need, even into the wee hours of night and on weekends, because preparedness doesn't stop. Call us 1-888-81-LIBERTY. That's 1-888-815-4237.
Welcome back to Liberty and Finance. We're here for our weekly market update with our CEO of Miles Franklin Precious Metals, Andy Schectman, this Tuesday, May 10th, 2022. Andy, thanks for coming back on.
Great to be here. And again, thanks for having me.
In full transparency, we're recording this the night of Monday, May 9th for Tuesday, May 10th. So if we say anything that's anachronistic, that doesn't predict what happened on Tuesday, that's why. But if we said anything that does actually happen on Tuesday, that's how awesome this show really is. And the weekly market update that keeps people in touch. We were just talking about some of the developments that are worthy of mention. One of the things that comes to mind is the absolute unescapable, unhideable, in-your-face, unavoidable, finally getting talked about on the mainstream financial channels realities of serious volatility in the equity markets, the stock markets, et cetera, and burgeoning, the benchmark treasury bond rate over 3% and hanging up there. And when we talked to Gregor Mannarino, the Mannarino market risk indicator pushing up into just on the edge of what goes into this high range for high risk. Just talked to Rick Rule. He's talking about buckle up, volatility ahead. So, you just can't sweep this stuff under the rug forever. So you who've been pounding the table for 2 years as we've been interviewing you, saying, folks, this is not normal. Folks, we're heading in a way that is not healthy and not sustainable. They're not being honest with us, et cetera, et cetera, et cetera. Don't be distracted. Don't be, Sun Tzu, the art of war, et cetera, et cetera. Now they're not being able to deny this anymore. So what are the latest examples of that reality check that's finally coming out? It cannot be contained any further from the public.
Yeah, well, the funny thing, and thank you for that. And look, we haven't really even seen market panic yet. I mean, the selling has been mostly orderly, if that's what you want to call it. But you have the Fed officials walking the ultimate tightrope. I mean, look, in addition to valuations being off the charts and inflation at multi-decade highs, you have government debt and deficit. Spending has never been higher. And you put it all together. I mean, look, I think before the lows are put in, we're going to see some serious disorderly selling, a disorderly sell-off. And this comes on the heels of supply chains still in chaos and world economies still being forced to shut down, like in China. You got war, you got conflict, and you have an economy that shrank last quarter by 1.4%. And, the question that everyone wants to know, is the Fed going to be forced to come in and comfort the markets more than they already have once things really get crazy? I hear people talking about equilibrium at 2%, and I'm like, what are they talking about, equilibrium at 2% when inflation is at 9%? Look, you look at the remarks that Jerome Powell gave just the other day at the FOMC meeting. His comment was that inflation is much too high and that the Fed is moving expeditiously, as he said, to bring it down. And he said, we have both the tools we need and the resolve it will take to restore price stability. So I don't know what tools he's talking about. They have the federal funds rate at 0.75%. If they go backwards to ease and accommodate, you're bringing the world reserve currency perilously close, or actually nominally negative. And we've talked ad nauseum of how this rate is actually real negative by 7% or whatnot, 8%. But to bring the world reserve currency nominally negative is a tool that I don't think he'd be willing to pull out. So when he talks about tools, I'm not exactly sure what he's talking about other than reversing course, which would be the same thing as eating crow and losing all credibility. And when he says these things, that they have the resolve and the tools to do it, I find it ironic that moments later he ruled out the possibility of raising rates by more than 50 basis points at a time, like 75 basis points that was bantered around for a while. So, the joke is basically they'll do whatever it takes to fight inflation, except for doing what it actually takes to fight inflation. This is the problem, and this is why we're going to reduce our balance sheet in June. What the heck are they waiting for? So the question is on everybody's mind: is this real, or are they going to do an about face, reaccommodate when things start to blow up? If we go back to 2017 or 18, the last time we saw the 10-year note really above 3%. And it may have been there one other time, but in 18, I think is when it happened, when they tried to raise rates at that point and tighten, everything started to blow up. Now, we haven't seen that happen yet, and the yield curve at the moment is not inverted, although it probably will start to invert. We're at, over 3% in the 5, the 10, and the 30-year Treasury. So, we're at that moment right now. But here again, we're still well below the rate of inflation. And so in order to fight inflation, first and foremost, they need to get serious. They need to raise rates to a level that is not just fooling around with 50 basis point increases or 75 basis point increases, which, still brings us well below the rate of inflation. And when you talk about selling off the balance sheet to the tune of 60 or 80 billion a month, why are they waiting? So I guess what I'm getting at is that I don't see Fed Chairman Powell having the courage that Paul Volcker did to really get tough on inflation. And this is why I focus so closely on what's happening to the petrodollar, to the relationship with Saudi Arabia and Nigeria, what's happening with Russia, the kicking out of the SWIFT. To me, the real issue with interest rates comes when the world grows tired of the dollar and of the Treasury. And look, you can see it happening with Japan already. Japan is selling off their Treasuries. They're the biggest holders of it. They're selling it. Not only are they selling the Treasuries because they are losing value in the face of rising rates, but the dollar, for some crazy reason, I guess Brent Johnson wouldn't think it's crazy with his milkshake theory, but the dollar is roaring over 104 on the Dixie. So the Japanese are getting less for they're converting their dollar, the yen, into dollars, and they're losing as rates rise. So the question is, who in their right mind is going to buy the U.S. bond? And I don't see anyone doing it. And I don't see the Fed getting tough enough on inflation to make a meaningful difference in where we're going. I think what they're trying to do, however, is push things so far down the road that the market does the heavy lifting for them. Any way you look at it, then again, I agree with Rick Rule. You are going to see great volatility. And if you look at market sell-offs or market blow-offs in either direction, up or down, they're very, very, very frequently accompanied with or you see prior to the blow-off or the takeoff, you see great volatility. And that's what we're seeing right now all the way across. Gold, silver, cryptocurrencies, equities, everything is volatile. I will say this, that precious metals seem to be holding their own. They're not really getting as clubbed as some of the other indices are. And look, the bottom line is where I think we are heading here, she who loses least wins. And I would rely upon gold and silver, which are woefully undervalued in relation to financial assets, rather than banking on the Fed. Because if they make a wrong turn here, which, who's to believe that they'll make the right turn? They haven't been honest with us forever. They told us that, the subprime crisis was contained in 2008. They told us inflation was transitory, and yet they continue to add to their balance sheet. Once they told us that it wasn't transitory, they tell us they're going to sell off their balance sheet, but not till June. They tell us they're going to make meaningful increases in interest rates, yet they said they're not going to go above 50 basis points. Look, the bottom line is the Fed is trapped, and I think when the market realizes, and I don't think the market figured it out yet, the market realizes that they're trapped, things are going to get really, really, really interesting. And I think volatility will be the buzzword, as will counterparty risk for the second half here of 2022.
You made me remember when you quoted Fed Chairman Powell talking about the Fed promising to do whatever it takes, and then your comment was except what it really takes to tame inflation. I remember at the Volvo dealer we used to go get our car repaired at back a long time ago, there was a cartoon up on the wall of a mechanic coming out from underneath the car, wiping his hands off in a rag, and his announcement to the owner was, "Well, that's all I can do without fixing it." So
that's the thing. I mean, what can they really do? I mean, if anyone really honest with themselves, if they really wanted to fix it, they'd stop screwing around with 50 basis points and they'd go 500 basis points or 600 basis points. They'd stop messing around with saying we're going to sell our balance sheet, pare it down, or start to tighten in June, and they would have done it last meeting or the meeting before. If they were really serious about it, once they admitted it wasn't transitory, why did they continue to add to it? They realize the market cannot handle the medicine. They understand that. Intuitively, and I think they're jawboning. And I really think if you were to say, was this all set up? Are they trying to blow up the system and create a villain? Yeah, I mean, I could make a story where this is all set up and they're trying hard to blow up the system, and they will blame the Saudis, the Russians, and the Chinese, and the BRICS nations who move away from the dollar and find a new currency to settle energy in. It won't just be the dollar. When that moment happens and all those dollars come flooding home, it does all the dirty work for Powell. They don't have to be the ones that raised the rates. It was those awful BRICS nations that gave up on the dollar, and they have a villain. And because you can tell by it's like, don't do as I do as I say. Well, with them, their actions are betraying their rhetoric. And that's the bottom line. The Fed is not getting tough on inflation. And anyone who thinks a 50 basis point increase in rates went to 75 basis points, not even 1% on the federal funds rate, 3% on the 10-year Treasury. If anyone thinks that's getting tough on inflation with 9% inflation, I have a bridge to sell you. It's not getting tough on inflation. And you can see the ramifications. Look, by raising the federal funds rate by just 50 basis points, look at what's happened to the mortgage rate. If they really want to get tough, I think they could start selling their $1 trillion in mortgage-backed securities, dumping them onto the market. Watch what happens to interest rates. Watch what happens to the mortgage rate. Watch what happens to the housing market. The commercial real estate market. These are things people really aren't factoring in. And I think a lot of people think that the Fed will come in and make this all better and a soft landing, and they're all going to be caught off guard, woefully off guard. And for those people out there lamenting about how gold and silver have not performed the way they should have, the way that intuition would tell us, remember what I've always said about misdirection. They are misdirecting because rising gold and silver exacerbate the impetus or the understanding that the emperor is not wearing any clothes. It's the wizard behind the curtain, and they don't want to pull that curtain back because rising gold and silver really signal the frailty of the whole system. And I think it's not a rush to liquidity. It's not a rush to liquidity at all. It's damage control. And it's getting harder and harder and harder and harder to do that. I will say this, they're damn good at it. They're damn good at creating a reality through price. And it's amazing they've been able to keep the price of gold and silver down as long as they have. And you wonder, why aren't big institutions and big industrials and sovereign governments not just draining COMEX? And maybe we'll cross that Rubicon here real soon once it becomes painfully obvious to everybody that the Fed is caught. And if they reverse course, if the markets really start to throw up, if we get to that point where it really starts to crescendo into a disorderly sell-off, not an orderly sell-off, but a disorderly sell-off, then I could see them reversing course. And when that moment happens, the world knows that they are going to sacrifice the dollar in favor of the economy. And this is the trap that they are in right now. And they're very reactionary. I don't think at this point there's anything that they can do proactively other than get tough on inflation and blow up the system. And like Paul Volcker did, It's just a different world today with the mountain of debt that we have versus 1980. It was easier to do in 1980, whereas right now, with a $30 trillion debt, not even talking about the unfunded liabilities exceeding $100 trillion, you raise rates and you bankrupt future generations. You bankrupt this country. You blow up the economy. There's your Great Reset. Is it going to happen? Don't know. But if I had a gun to my head, I would say the Great Reset is underway. And if I really were being honest with myself and with everyone out there, I would say there's a better than 50% chance in my mind that this is all engineered to find a villain to do the dirty work for the Fed, because the Fed does not want to be responsible for blowing up the entire system, even though it's of their own making.
You know, you've talked a lot about people who are being affected by rising interest rates, and yet there's going to be this runaway impact on potentially deflationary impact on housing prices, on commercial real estate, on the equity markets, and so on. One of the concerns that many people have who are anticipating, hoping for retirement, is that all their eggs are in these various investment products and funds and balanced 60-40 portfolios, and they've got their neighborhood financial planner that's trying to talk to them soothingly and say, look at the charts for 40 years, for 50 years, things have just generally trended up. Sure, there's normal corrections, that's healthy in a market, but then things just go on up. Rick Rule reminds us that the interest rate environment has been abnormal and has continued to become increasingly abnormal over this period of time, and debts and deficits abnormal as well, currency creation abnormal as well, all trying to create the illusion, as you've described, of health in the lack, when it's really the internals of the market are just horrible in many cases. So people, I just wanted to let two little data points, just anecdotes, is that just in the past week, I've had a rash of referrals to me who are clients of professional financial advisors, and these financial advisors actually are sending them to go get some physical precious metals before it's too late, while they still can, while it's still an orderly, before the rush and crush and the crowds, trampling people literally, figuratively, for the exits in the market, and at that point when there's no metals to be had, and I've never had it happen that way before. I've been onesie twosies, and then also in the same week, another financial planner themselves directly reaching out to obtain precious metals, and I know the name of the company that this financial planner works for, and they do not support any physical financial, possession of precious metals as any option for their investment portfolios that they offer for their clients. So here I've had both professional financial advisors referring their clients to come get metals before it's too late, protect themselves, and also ones themselves reaching out directly to do that.
And that's really interesting you say that. A 60-40 split, 60% stocks, 40% bonds, is traditionally the way that this has gone down. And it's easier for people to rationalize, I think, a rising market forever. Technology, better investment, capitalism, you're more efficient, prices rise, blah, blah, blah. But if you try to really think about what makes a bond rise, it's inverse to interest rates. So as interest rates go down, as they have for the last 30 years steadily, the bond market has gone up. You're talking the mother of all bubbles, because how does the bond market continue to go up? Well, rates have to continue to go down. And we're already, A, we're tightening and moving away from that, but B, they're not high enough yet to where the only way if they really continue to go up is if we see a massive drop of interest rates, which that's not going to happen. The Fed loses all credibility at that point. And you think about the pensions and the insurance companies and the retirement accounts that have engaged into a 60-40 stock bond allocation, this will not end pretty. And I really do believe that before this is all said and done, we will see disorderly sell-off. And to presume that the Fed can engineer widespread prosperity forever and a soft landing is foolish and naive. We are at that point right now where these types of best laid intentions need to be reevaluated. And that's why you're getting these phone calls, because I think even the advisors, if they're honest with themselves, would have to say, geez, nothing goes up forever. And the bond market, which has been the greatest rally bull market of all, is, I think it's about as dangerous of a place to be as you could put your money right now, which is, you look at the U.S. and you have currency risk, you have interest rate risk, you have solvency risk. I mean, the U.S. government, which is considered the safest investment of all time, we're insolvent, we're broke. Completely and totally. They're talking about rates rising and countries starting to shed them and sell them. So the bond market is by no means safe. And I think you have lots of risk that people aren't factoring into it. So yes, for you to be getting those phone calls, we have as well. I think it's completely normal. If I were a financial advisor and, hard assets were something I really didn't put into the equation, I mean, where the heck do you put your money? You put it into cash where it's losing 9% through inflation? Do you put it into the stock market at sky-high PEs with that is off to its worst start? You look at the Russell, it's off to its worst start in years. The NASDAQ, its worst start since its inception in 71. The S&P 500 to its worst start since the Great Depression. I mean, is this the market you want to put your money into, or the bond market, which, this is not a safe place. This is not an easy job right now. So I think for them to acquiesce, good for them. I think they're doing the right thing. And if anyone were truly honest with themselves as to where they wanted to put their money in this environment, if you can find some place that isn't precious metals that you feel safe about, let me know. A lot of people say cryptocurrencies. Look at what the cryptos are doing. Why are the cryptos getting hammered? Because Wall Street took them along for the ride. With all the money that was created, a good bunch of it on Wall Street went into the financialization of the crypto market. You have these huge hedge funds and big funds that are invested in not only cryptocurrencies themselves, but the derivatives, the stocks of like Coinbase and all of these other things in the crypto sphere are very much financialized through Wall Street. So the purity of cryptocurrencies in many respects, which is, the decentralization and the peer-to-peer and all of this stuff, has been polluted by Wall Street. And I'll tell you something, if Wall Street collapses, if you don't think that Bitcoin and other cryptocurrencies are going to get their rear end smacked hard, here again, I think you're making a big, big, big mistake. That's not to say they don't have a future and won't come back. But I think that a lot of people, and look at all the people who invested in Bitcoin through Robinhood. I know people my age that have, and I ask, why do you do that? Why do you not take possession of them yourself, hold them in your own possession? Well, it's much easier to do it on Robinhood. So you got all these people who have bought, and like the Grayscale, and all of these ways to invest in cryptocurrencies through Wall Street. So I think that it's not the safe haven that a lot of people think it is. When the dollar collapses and the markets collapse, I do believe Wall Street will drag it underwater with it. And I think people need to think about that a little bit. You don't see massive Wall Street participation in the metals market. You do see manipulation by the commercial banks. It's like the one thing they're holding down should be the key to everybody. They're letting everything else go to the moon, sucker you all in, right, before the Great Reset. But the one thing that they just want everyone to think is crap and an archaic relic of the past, the same thing that was reclassified Tier 1, the same thing that the big money is quietly engulfing, the same thing that from a retail basis is you can't keep in stock, is the one thing they're telling us you shouldn't be investing in. Do you see the misdirection in all of this? So people are too blurred and blinded and infatuated with price. I get it. When you buy something as an investment and it goes up, you feel like a genius. But I will tell you, there's something to be said for the fact that everything is going up or has gone up except for metals. Yet that's the thing that the biggest money in the world has been accumulating. I think that you need to take a step back and read The Art of War and look at, think about a little bit of misdirection. And, gold and silver are doing what they're supposed to do. Yes, they're not going up. And in fact, they're going down. But I would argue they're going down a lot less than a lot of the other big markets are and will be. And before it's all said and done, when we cross that Rubicon, when people realize that traditional investments need to be abandoned, where are they going to go? That's when everything changes in the metals market. That is when it will become impossible for the banks to hold back the price any longer. And one of these days, when they keep smashing, maybe they are repositioning. The commitment of traders report looks great right now, and you got the commercial banks, the least short they've been in a very, very, very long time. They rinsed and washed. One of these days, maybe they'll just let it go to the moon. Maybe that's why J.P. Morgan amassed 1.1 billion ounces of physical silver and 40 million ounces of gold. Maybe one of these days they stop manipulating it because they realize that the world is awoken, not just the U.S., but the whole world is awoken to inflation, to chaos, and to what's happened with Swift and Trudeau. And they're all thinking, even if they're not saying it, are we next? And I just think all of these things put together make owning metals more important than ever. And this is going to sound really trite, and I'm not trying to be a jerk by saying this, but the price doesn't matter right now. It doesn't. It's the only island of safety right now where you can say, hey, it is inversely correlated to the U.S. stock market and to the chaos that's coming. And if you are thrown off by the manipulation and by the volatility, this will be the one time to really try to strengthen your grip and your resolve and trust your gut. It's never been more important, Dunnigan. Honestly, it truly has never been more important through this volatility especially.
Yeah, part of the volatility you mentioned briefly in passing is not just whenever people hear that on the mainstream financial press, it's always meaning drops in the market. They call that volatility. But volatility can mean up or down. And the reason that there can be these violent lurches up or down is because market participants really are concerned about missing out either way. There's fear of missing out. Oh, is that the direction we're going? We're going to rush that direction. Or no, we're in fear of flight to safety. We've got to get out quick before everybody else does. But there's that brewing sense that something big is coming, big is about to change, and they don't want to be in the wrong position. And yet that flight to safety is so illusory. If the only place that people have been conditioned for the last generation or more, a flight to safety means a flight to paper cash or fiat currency. And Alistair McLeod keeps reminding us that that's a second awakening that people will have, is that, and it's coming out, as you're saying, when inflation can no longer be denied, that the debasement of the currency and the destruction of the purchasing power of the currency, that it is not a flight to safety, and it's a reawakening of what the actual and original, the essential and eternal flight to safety is not to fiat currencies.
Well, yeah, and even more to that point, when it becomes obvious that the dollar is in trouble or all fiat is in trouble, and one nation dumps it, let's say Japan sells everything, or China sells everything, or Saudi Arabia says we're no longer just taking dollars, and you see countries start to sell that, it'll be that exact same thing. Everyone will start to immediately dump dollars because they don't want to be left holding the bag. The same thing would be true with treasuries. And look at Japan shedding treasuries. I think it starts as a slow run, but very quickly can move in the other direction. And the same thing would be true about precious metals when the whole world transitions. Maybe China comes out and says, we are backing our new digital yuan that's already had 8 billion in transactions over the last year, that is backing our new Belt Road Initiative. Oh, by the way, we've been accumulating so much gold, we actually have 30,000 metric tons, as Alistair McLeod thinks, and we're going to peg it to our new yuan. And by the way, India and Russia have agreed to join in on this new endeavor. We have coalesced as a BRICS nation, and India and Russia have this much gold. And now we have 100,000 metric tons behind the new digital BRICS nation currency, which we've run for the last year to make sure that it works. And the immutability of the gold is held on a distributed ledger. There's your villain. There's your great reset. There's the whole thing blowing up in a matter of minutes. And that's how fast it happens. It's not going to be a slow burn. I mean, people have had so much time to reposition, and people are too fixated on price. They think they're smarter than the market. They think you and I are just trying to talk our book. All I can simply tell you is that the dollar experiment is coming to an end. And I do believe, because the heights to which everything have gone up, and the proliferation and the saturation of the dollar everywhere throughout the globe, as it is the foundation of every single currency out there. If it changes, it'll happen in a way that, like you just said, people will panic and will try to get out in front of it because they know it will precipitously and rapidly lose value in the face of global chaos. So I hope I'm wrong, but I see these things coming, and what gives me greater resolve in that is the incompetence and the borderline lying of the Federal Reserve. Their actions are betraying their rhetoric. They are trying, I believe, to let the market do the dirty work for them. Just look at what the mortgage rates have done. With the Fed only raising rates by 50 basis points, the mortgage market has doubled. They want the market to do the dirty work for them without being blamed for blowing everything up. And I think you could argue that this has all been contrived. And I think the more we push, the more that we push countries like Russia out of the system, who are responsible for 10% of all, global oil production, the second largest exporter of oil in the world, the largest exporter of natural gas in the world, the biggest producer of potash and phosphate fertilizer. And we're creating a really big problem, and I think it signals the demise of the dollar. And it's much easier to find a villain to do this for you while you're talking tough than to do it yourself. And the fact that they're talking tough but not doing anything about it tells me that they would rather choose the route of villain and a rallying cry behind it, ushering in the new digital dollar and the Great Reset, than be responsible for blowing up the whole American dream. And I think we're that close to it happening. I hate to say this, but we are. Because if rates rise, it's all going to get very religious very quickly.
Yeah, that's the other thing that you just mentioned that I forgot to mention, is that the nature of the phone calls that I've been getting over the past week have been more and more people saying, I'm really uncomfortable because I've got this many figure balance in the bank account. I've got this many figures of dollars. It's like, you just think about that. Just think back a decade or two. It's like people feeling anxious and concerned and feeling like they've got to do something because they have too many dollars and they don't feel comfortable with that, and they don't trust the dollar itself, and they don't trust the bank, and they don't want to lose that access to that purchasing power. They don't want to see it inflated away. It's really remarkable the change in the tone about people, what they're saying about their concern being that they have too many dollars, leaving them unprotected.
Yeah, it seems like a problem most people would love to have.
Yeah, all our growing up years, that's what we were told to do: is work hard, save, and pile up a big pile of dollars, and that's where your security is going to come from.
And there was an environment where that worked. When I started in this industry, interest rates were 9%. You could put $1 million that you saved over a lifetime into 10-year treasuries and make $90,000 a year tax-free, and leave your $1 million principal for your 3 kids. Right? So doesn't work that way anymore. Now, if rates were to go back up to 9%, it would. But where you have rates right now, in order to do that, it would take minimum of, I don't know, like $6 or $8 million to come even close to that. My math is probably off, but look, the bottom line is simply this: that having all of your assets in dollars, in my opinion, is the surest way to go broke. And I never thought I would ever say something like that, but it's true. And not only that, you got to ask yourself, why did they impose bail-ins? Why did they impose gating? Did they know mathematically that this would be the bridge that we would ultimately have to cross? Why are these things put into place? I think that they ultimately know that the mathematics of it is something you cannot hide from. And it seems to me they've squeezed just about as much out of this system as they possibly can. And this is where I think the disdain for the U.S. dollar and Treasury is coming into focus, that there's no way around it. And when the Fed is the only one buying the bonds, you're talking, Weimar Republic, Germany. No one is buying our bonds. The biggest owner of our bonds is now turned into net seller, Japan. And so We've already aggravated Russia and China, and so they're not doing anything with our bonds. They're not buying, they're selling. Japan is selling. Who's going to buy our bonds earning a negative 6% return or a negative 7% return? No one but the Fed. This is what the market is going to have to wake up and realize, is that, our deficit style financing, our deficit living, our borrowing to live above our means is coming to an end. And when rates rise, that's when it gets really, really, really crazy, because everything that we value is inversely correlated to the rise in those rates. So, yeah, Dunnigan, this is real. It's as real as it has ever been. And I think what the Fed is doing is it's laughable, and they're treating us as idiots. But the thing of it is, most people don't look past the evening news and the rhetoric coming out of your 60 Minutes in your evening news. They're not telling us and why they don't say to us a 50 or 75 basis point rate hike is meaningless. Why they talk like that actually has teeth in it is why so many people are going to be caught off guard. And look, they would have to do, at a 50 basis point rise, they would have to do another 18 rate hikes at that rate just to get to the CPI number, which is half of what John Williams says it is. So are they getting tough on it? And if they were really getting tough on it, why have they not started selling off their balance sheet? So that should tell you all you need to know about what the Fed's intentions are. It's the rest of the world I'm concerned about, because they know what the Fed's intentions are, and they, I think, have grown tired of it. So this is where I am focusing less on the Fed's lying and jawboning, and more on what's happening in Russia, China, and Saudi Arabia. This is where we should all be watching, in my opinion.
Well, we've been focusing on the financial realities, what's really going on versus what we're being told, as well as market realities, and what's masking the underlying internals of the markets. We haven't talked about precious metals. I don't think we have time today. We're already way over our normal time to talk about the precious metals. Availability, I understand, is still difficult, scarce to get retail product. So you're carrying over, if I understand, the specials from last week rather than introducing new ones?
Yeah, since we had our last show on Thursday instead of its normal time on Tuesday, I felt just leaving it for a few days was too short. So we still have enough supply of the 3 items, or the 4 items, that we had on special last week. We'll continue what I think are the best prices in the country on these items. I've been looking. We have the 100-ounce Royal Canadian Mint bar, the brand new style, brand new, fresh from the Royal Canadian Mint. $3.95 over the price of silver per ounce. The Kilo Koala, big coin about this big, really neat, from the Perth Mint of Australia. $4.50 over the price of silver. The 10-ounce Kookaburra, which is a bird, kind of like a hockey puck. Both of these come in hard plastic capsules. They're awesome coins. Those are $5.50 over. And the 100-gram Valcambi CombiBar, which breaks into 100 1-gram pieces. It's about as thin as a baseball card, and kind of like a Hershey bar, perforated, where you can snap off a piece. Those are $89 over the melt value of silver. These are best prices in the country. We still have enough supply to carry it forward one more week. I feel good about offering them. I bought a bunch of the 10-ounce Kookaburras and the Kilo Koalas myself. They are amazing coins, and I think it's a good way to get a fair price on a coin while not giving up the utility by buying a giant bar. These are, not only that, they're really eye-catching. They're about the size of a hockey puck and thick, and they blow people away. Great gifts, great way to put money away, great way to accumulate silver right now in a high premium environment at a good price. But the very best value of them all right now, in comparison to the national average, is the 100-ounce Royal Canadian Mint bar at $3.95. Most companies are $2 or more higher. So whatever you choose, this is good stuff, brand new, in stock, and ready to ship them.
Yeah, I had a gentleman purchase a number of those Royal Canadian Mint bars from me yesterday, saying that he was going to buy them from an online dealer, and boom, they were sold out over the weekend, and he was going to check another place, and they were sold out. And he said, well, after all, you guys are the better price anyway, so I'm going to try you for the first time. So anyway, it is the best price.
That's the issue of not being online. I'm sure we missed out on a lot of that business. Our website will be done one of these days, and when it is, there will be greater access to that. But in the meantime, I try to just make sure our prices are as competitive as anyone in the industry. In this case, they're better. And this is good stuff. Of all of the 100-ounce bars that you will ever see, the Royal Canadian Mint 100-ounce bar is the prettiest bar there is, period. It is as beautiful of a 100-ounce bar or a product as you will ever see. It fits the stereotype of what silver bars look like to a T. It's crisp. It's just beautiful. So I own a bunch myself, and I think if someone's looking for a way to get a great value on silver, a larger amount without sacrificing liquidity, it's as good of a buy as you'll ever find, or as good of a price as I've seen on these bars in 2 years.
Well, Andy, I know I've held you way over time, so thank you for hanging in there with us and elaborating on some of these topics that are actually happening right now. I mean, this is like the play-by-play as the U.S. dollar and the bonds and everything else is unraveling, and the major indices and so on. We'll look back at this time and see that this was a time of real change, a real transition. We're always grateful for your presence here with our viewers on this weekly market update here on Liberty and Finance. Andy, thanks for coming on.
Again, it's always my pleasure. I look forward to seeing you next Tuesday. All the best to you and yours and everyone out there. Have a great evening.
Miles Franklin Precious Metals is one of America's oldest and most trusted bullion dealers. Miles Franklin is A+ rated and accredited by the Better Business Bureau, licensed and bonded, and has 0 complaints ever registered. Here at Liberty and Finance, we are licensed brokers with Miles Franklin. To order, simply call us, discuss your needs, and we will let you know our live inventory, prices, and availability, and lock in your order over the phone. Once your order is locked, the price is held for you regardless of market fluctuations, and the metals are reserved for you awaiting your settled payment. Within 1 business day of ordering, you will receive an email invoice detailing the order and payment instructions. Miles Franklin accepts payments by bank wire, ACH or electronic check, money order, check mailed priority mail, and cryptocurrency. The fastest forms of payment are bank wire and cryptocurrency. Upon settled payment, metals will ship out within 3 to 5 business days. You will receive tracking information via email. Domestic shipping charges are $15 for any order under 500 ounces of silver or 10 ounces of gold. For orders larger than that, domestic shipping is free. The package will be double boxed, fully insured, and labeled discreetly, with no indication of the contents inside. For your privacy, the name Miles Franklin will not even be on the package. To talk to myself, Elijah, my brother Kaiser, or my father Dunnigan, call 1-888-81-LIBERTY. That's 1-888-815-4237.